a couple new setups and the mentor program, and we're going to cover trailing stops today. And you've got a lot of great stuff to review and rewatch this weekend. Yep, John says got to do a lot of market replay, a lot of back testing. Be ready for next week. And again, keep in mind on Monday we do have a webinar. Apex will be closed on Monday. And so will most of your markets here. If you hop on over, just so you know I've referenced this webinar calendar many times over the last week here, but not only can you go here and check out the webinars and get signed up for all the different webinars, but right here, Tony has popped in, letting you know the Nadex and the US trading floors and the Apex hours and all that as well. That way you know the schedule of everything, when it pops back up, when everything is open again, and all that good stuff there. But we will be, the service desk and all that will be closed during the daytime, but on Monday. But we will be doing that webinar, okay, on Monday, and getting you a brand new release. So, all right, let's just hop in here since I've kept you waiting so long. Sorry about that. Okay, today we're going to talk about trailing stops. And, like I said, you've learned the power play entries. You've had some great webinars this week. I gave you, 4 new trades Wednesday, I believe, with the extra powerful setups. And then we had to talk about the 5 trades on C's. But, let's see here. Yep, there we go. Sorry, I had the wrong one up. So you've got plenty of entries. We've already agreed about that, right? We've got a lot of entries for you. But what do you do after you have an entry? What do you do? You've learned all these entries. You've got plenty to keep you busy. You understand the setups. But once you get in, what do you do? Where do you exit? Where do you get out? Where do you start protecting your profits? And I know that's been a question for a lot of you here. You felt like the first week or two you were really focused on learning the entries and the setups, and then you finally got a handle on those. You're like, okay, cool. But now it's like, well, wait a minute, what do I do now? Like, I'm in and I've learned now when to get in, but I don't really know what to do. And you want to be able to protect some profits, but you don't want to protect them so tight that you don't give it room to run. If you get out too early, then you miss the big runs. I'm sure we've all had that, right? Like, oh, it was pulling back a little bit, so I got out because I wanted to protect, and then, man, it took off. Look at that. Oh, man. So the next time you say, hey, I'm going to give it more room this time. That way I can let it run, but it ends up coming back against you and taking away a lot of your profits, right? We've all had that happen. We all know how frustrating that is. And part of that is just trading, and part of that is just something that takes time to learn. And, you sit there and you look back at your charts and you see these entries and you think, man, if I'd gotten in here and then I stayed in all the way to here, I'd have been great. But how would I have known to do that? How would I have known to stay in or known to get out? How is it I see these leaders in the room or Lori's big charts of right where to get out? And, to be honest with you, it's not something I can teach you very easily. And it's not something I can teach you how to do it all today. It's not just an ABC, 1, 2, 3, follow these rules. It's not just, okay, do this, 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 and you're good. All right, I'm going to teach you some. I'm going to give you a couple ABCs and 1, 2, 3s. All right, I'm going to kind of teach you as a newbie. All right, okay, as a newbie, as a beginner way, here's a way for you to trail your stops. All right, and then we're going to build on that, over the next weeks here. As you've already seen on the calendar, we've got 3 different advanced trainings scheduled for order prints. Okay, but you'd have to learn to kind of see it. You have to learn to read the markets, know the market you're trading, get a feel of the market. You have to master order prints and understand levels and volume and VAT and divergence. And there's multiple things that we're going to kind of combine here into advanced training over the next few weeks here. But I'm going to give you some basics today to get you started and get you on the right path. Okay, so just keep in mind, it's not something I can teach you the magic holy grail today in one webinar. And maybe even not in just a couple webinars. Some of it will take a little bit of time, but today I want to get you on a path to get you started. Okay, So first of all, some people say, well, what are you talking about trailing stops? Like, what is a trailing stop? What does that mean? All right, well, just basic 101 here, okay? Let's say that you're, in a trade. Let's say for whatever reason you took this trade up, right? And you bought here and you're taking this trade up. Well, we know the market's not going to go up forever, right? Okay, and we know at some point it's going to go up, up, up. You're going to have all this profit, and then it's going to start to come down. And how much profit do you want to get back? Because each and every tick you're going up, you're being profitable, right? You're making money. Your P&L balance over there is going up, 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 up. And then now, as these bars start to come back, well, now your balance going, starting to come down and down and down. You're giving some profits away. Now, sure, the market could come back down quite a bit and then keep going on up. And man, I could have made a little bit more. But what if it just completely reversed against you? And trailing is just simply, hey, I don't want to give back too much of my profits. As the market's coming up, I have a stop order below it. Like on our initial entries, where's our stop? Let's just say this was an entry here, okay? Like a divergence entry. Well, when this bar closes up, what do? We enter 1 to 3 ticks above the bar, right? And our initial stop is 1 tick below the bar, right? That's our initial stop when we get in. Well, so let's say the market's going up and we're up 10 ticks, we're up 15 ticks, we're up 20 ticks. Well, we don't want our stop to still be way back down here and wait for the market to come back and hit us, right? So as the market's going up and as our profit's going up, we want to move that stop up. That makes sense? We want to, trail behind the market to where we're protecting some of our profits as we're going up, but we're not trailing so tight we're just going to get knocked out within a few ticks, okay? So that's what I mean by a trailing stop. We want to be able to follow that market up, okay? And that can be, like I said, something that you'll have to you perfect over time, and everybody kind of trails a little bit different. All right, I'll give you some basics here, but everybody trails a little bit different. Some people are only trading one contract and they trail a certain way. You probably saw in some of the training courses, Lori gave an example of how to trade 2 contracts and do one as a scalp and one as a trend trade, and everybody trades a little bit differently, okay? And everybody trails a little bit differently, all right? So, real quick, this simple method that I'm going to start off with today teaching you, this is not for Nadex binaries, okay? If you're trading the ultimate power play with Nadex binaries, it has its own rules, all right? Go back and watch that section. It has its own rules. We tell you exactly where to enter, set your take profit order, and that's it, okay? This is also not for scalp setups, all right? Any of the trades that we've taught you, any trades that you're taking that are scalp setups, this is not for scalping. All right, what's one of the things with the ultimate power plays? Right, we have certain rules and requirements, and clusters is one of those requirements, right? But what do we teach you in the training course? That you can take a power play setup without a cluster, correct? You are able to take it without a cluster. But what is the big rule for when you take it without a cluster? Yeah, Randall, right. It's a scalp only. All right. That cluster is what's kind of helping to qualify it as a power move, right? So without that cluster there, we're not necessarily looking for or necessarily expecting a big move that we normally would. So we just want to go in for a scalp. And what are the rules there? Once you're up 10 ticks, you move that stop right up there to 10 ticks and protect it, right? And oftentimes, that will knock you out right away. Sometimes the market will keep going on and, you can get a little more out of it. So for binaries, follow those rules. For the scalp setups and the ultimate power play scalp setups, follow those rules. This does not apply to that. This does not change those rules. Okay, does everybody understand that? Like, that's very, very important here. This is for the regular ultimate power plays where we're hoping to get the bigger moves, okay? So very important that you get that, or that will really kind of mess you up. All right, so I want to go back to something that I touched on the other day in the webinar, because this is kind of the first step and the first foundation here. All right, so let's pull up, let's see. Let's go to the additional powerful setups here, okay? And what is something that we talked a lot about the other day? And what is one of the big things that everybody said, oh, light bulb, duh. What did we talk about? We talked about how awesome it was that you had these extra trades. And we talked about how awesome it was that on a lot of these trade setup examples I gave you, there was what? What happened within a few bars of these entries? Like 70 or 80% of the time that we reviewed and talked about. Slings, seize plays, extra entries, right? Secondary entries. We talked about that, right? And I even said, hey, how many of you guys have seen that? Okay, and what did y'all keep saying? Oh man, we see them all the time. I mean, it seems like almost every single one, like they're all over the place with these extra entries. Remember we were talking about that, like here, you know, a power P and we enter and oh great. Well man, I missed that entry, but oh, what's awesome, look, I got a power sling kind of set up here. You know, I've got a sling with it's not necessarily a power sling, but I've got a sling with a mini magnet. That gives me a second entry, or maybe here's another sling. Oh, that's awesome. Because on a ton of these trades, I can get a second entry. Right? We talked about that. And you guys even raised your hand like, oh yeah, I see them everywhere. And then what did I tell you? I said, okay, so then tell me what you're doing wrong when you get an entry and you get just a few ticks up in profit and you want to start moving that stop down. What are you doing? Remember, and all you were like, oh, I'm slapping myself. Oh, light bulb, duh. It was kind of a big duh moment, right? Like, oh, right. I see it. I know that's going to happen. I expect it. And that's such a positive thing to know I'm going to get that second entry and I'm just getting stopped out right away, right? Like right here. I think this is one of the ones we looked at. All right, on this power P, we've got a P bar reversal with the cluster. The bar closes down. Where do we enter? 1 to 3 ticks below it. So we're going down and down. We get up, 3, 4, 5 ticks. My stop's way up here. Ooh, I'm going to bring my stop way down here because I'm up a few ticks. I want to protect that. And then what happens on this next bar? Boom. Oh, man, I got in this trade. It immediately went up and stopped me out. And then what did the market do? It came back and went in my direction. It was a great trade. Oh, I hate this. This doesn't work. This trading thing don't work. This power play thing doesn't work. I can't trade. I can't make it work. Everyone else has got that big move and is coming back against me. How do they do this? Is it the trading doesn't work or the power play doesn't work? Or did you not take a step back? You were so focused on, I'm so freaking out that I pressed a button and entered this order. As soon as I saw a few ticks in profit, I wanted to pull my stop way down. And you got hit, right? And you got hit. And I think some of you guys really got that the other day of, oh yeah, those are great. There's secondary entries. There's these pullbacks. I love that. I can get in again. Oh, what am I doing? You're literally just, like I said, you're just walking out in the front of traffic. You see traffic coming. You know traffic's coming. You know when that light turns, traffic's probably going to come and probably hit you, but you're just walking out in the middle of the highway, right? You're doing the opposite of what you should do. You're in New York City trying to cross the street and the light says walk and you don't walk. And when the light says don't walk and the hand comes up, that's when you decide you want to walk. But you know exactly what that means. It means traffic's probably coming, right? I mean, I know I'm oversimplifying that and really stressing that, but how many times have we seen that and talked about those pullbacks? And so you know they're coming. And that's the very first thing you have to realize and think about when it comes to trailing your stops with the ultimate power plays. Okay? And when do we normally see it happen? Like, I mean, sometimes there'll be second entries way down there, right? Like way into the trend. But a lot of times, when do we see them happen? Like after our initial entry, when do we see some of those first pullbacks? Normally within just a few bars, right? And you know, like for example, if you're taking a power X or a power P, you know, that we were looking at, let's pull up a couple of those here. Let's take a below, like on that one right there. Where did it happen? Or let me ask you this. I need to nail this home. This was our setup bar. The bar closed down. We enter 1 to 3 ticks below it. This bar right here gives us 5 ticks, right? So we're already a few ticks into that. Say you get up to 4 or 5 ticks, and when you're in 4 or 5 ticks of profit, what bar are you on? Like if you entered properly 1 to 3 ticks here, what bar would you need to be on for your P&L to say that you're up like 4 or 5 ticks? What bar would you be on? The third bar, right? And you're like, okay, I'm up 4 or 5 ticks. I want to move my stop down. But if you're following the entry rules right, and I've seen a lot of you move your stops up when you're at like 4 or 5 ticks. But what bar? You'd be on the third bar right there, right? What do we know about third bars? What can happen on third bars? What is a powerful setup we've talked about that happens on third bars? Yeah. When we covered the C's system, there was a specific section about what? Third bar slings. And we've talked about third bar slings. I taught you how to trade third bar slings. We showed you how third bar slings can be so powerful. So does it make any sense whatsoever to move your initial stop going into or in the middle of a third bar that could potentially be a third bar sling? I mean, does it make any sense at all? Show of hands, how many of you have done it in the last 2 weeks trading the power play? Right, a few of you have, right? Do you see now how that was a big mistake? Do you see now how that makes perfect sense why the market came back and got you? And why the market came back and hit you? Okay, so that's the first thing to keep in mind is we're almost always expecting a pullback. We're almost always expecting a second entry possibility, right? Opportunity. And we know that it normally happens within a few bars. Doesn't mean we don't get more later, right? We get some more opportunities later at times, but we know a lot of times it happens within a few bars. Okay? So do we want to be moving our stops up within a few bars? Do we want to move it up too tight? I mean, even look at this example here. When we talked about this double divergence, all right, we've got the double divergence. This bar closes up, has a mini magnet, has a cluster. We enter 1 to 3 ticks above it, right? So let's just say we got a couple ticks of profit here, 5 more, we're up to 7 ticks. All right, hey, I'm up to 7 ticks. I want to move my stop way up here to break even. What happens on that very next bar? It pulls back and it would have got you, wouldn't it? Do you see that? Everybody see that? It would have got you right there. And you'd have been knocked out, and then what would have happened? That bar closed up with the cluster and went way up here. And you missed out on all of that. Right? Because you moved it up because you were like, oh, I'm like 5, 6 ticks up in profit, 6, 7 ticks. I'm going to move it to break even right here. And where did it come right to? Now let's talk about a little something here. What do you think the sharks are doing? What do you think the market makers, the market movers, the big boys are doing when they're hunting stops? They're taking out stops. They're seeing orders there and they're popping down to get them. What do you think? Do you think the big boys, do you think the big institutions moved their stops up after 5 or 6 ticks of profit? Do you think they were taking this trend up and they moved after they were 5 or 6 ticks up? Do you think they moved their stops all the way up here? Or do you think the day-to-day retail traders that are getting run over by the big boys all move their stops up there? Doing the same thing that you have been doing, some of you. Oh, I'm up 5 or 6 ticks. I want to protect and get to break even. I'm going to put my sell order right here. Those big boys see all those sell orders right there above that bar, don't they? And what did they do? They just came right back there and grabbed them all and said, thank you for a few more and let's keep going. Does that make sense? That kind of helps you see what's kind of going on there. Okay, so I need you to see that you need to expect that within the first few bars and not move your stop up too quick, or else you clearly see in examples I've shown you and what you've seen yourself, it's going to hit you. Okay, it's going to hit you big time, and it's going to hit you quick, and then you're going to get all upset. But again, you know that it's coming. Okay, so let me ask you a quick question here. If we followed the rules in this trade and we entered 1 to 3 ticks above the close of this bar, so what do we know that, all right, this is a 10 tick bar. So how many ticks does each bar give us in profit? The way that these diagnostic bars work. 5 ticks, right? Because it's a total of 10 ticks for the whole bar. But this bar closed up. When this next bar closed up, we get 5 more ticks, 5 more ticks, 5 more ticks. So if this bar closed up and I entered, let's just say 3 ticks above this bar, 3 ticks above the close of this bar, and then this bar closes up, how many ticks am I up at the close of this bar right here? 2 ticks, right? No, Phyllis, not 8. I'm 2. Okay. David, Phyllis, that makes sense? This bar closes up, so I enter 3 ticks above the close of this bar. So I enter it right here on this bar. So I've only got 2 ticks left in this bar of profit. That makes sense? Okay. So I'm up 2 ticks. Then this bar closes up, and I get 5 more ticks, right? So I'm up 7 ticks. And then this bar closes up, I'm at 12 ticks. I just want you to think about 10 ticks for a minute. If I waited till I was up 10 ticks of profit, I'd be right towards the top of this bar, wouldn't I? Right here, right? Make sense? I would also be past my potential what? Third bar sling. Correct? 10 ticks gets me past that third bar sling and gets me up towards the top of this bar right here. That makes sense? So if I think about 10 ticks, if I'm following the rules right, gets me past that third bar sling. Even if I only entered 1 tick above the bar here, I still got to get to this 4th bar to be at 10 ticks, right? Okay. So, especially looking for that third bar sling, I want to get past that. I don't want to touch my stop till I get past that potential third bar sling. Now, it doesn't mean the 4th bar can't pull back a little bit. But I want you to think about not moving your stop. Your initial stop's down here 1 tick below. I want you to think about not moving your stop until you're at, don't even think about it until you're at 10 ticks in profit. Do you see how that right there gets you through the majority of that third bar sling issue? Okay. And that doesn't require a lot of reading markets and VAD and order prints in depth. That's just a basic kind of elementary beginner's rule of 10 ticks gets you past the third bar sling issue, right? Okay, cool. Now that we've got that part down, and now that everybody kind of understands that, like I said, we all know to expect it. So let's switch gears for a quick minute. Let me pull up this chart. I want to talk to you about a particular apex indicator real quick. And some of you are familiar with it. Give me just a second. I'm gonna connect to simulated data, and I want to get this market moving here. Yeah, there we go. Okay. So everyone should be familiar with the bar range indicator, correct? And what is the bar range indicator? Well, it's for diagnostic bars, right? Okay. And hold on, let me make some room here. I need you to be able to see this. Okay. So what does the bar range indicator tell us? The bar range indicator tells us, all right, this diagnostic bar is forming right now, right? We're in the middle of a diagnostic bar. And if the market comes down here, so the market's right here, the market's right here. Right now it's at 58, 98, 50, right? Well, what is it going to take for it to make a new up-close bar? Well, the market has to reach 5,900, and then if it moves one more tick, it'll make a new bar, right? If the market, well, what will it take to make a down close bar? Well, the market's right here right now. It'd have to come all the way down here to 58.95 and then go one more tick and make a new down close bar. Okay? Everybody understand that? Is there anybody here that wasn't familiar with how the bar range indicator worked? But that's what it is. It's just showing you, okay, what will it take to make a new, like right now, what will it take to make a new down close bar? The market's right here right now. It'd have to come down to here and then go one more tick. Okay? All right, David says do that again. Sure, David. Let me see if I can. Oh, duh. Hold on. Okay. So, sorry, one of my keyboards is messed up here because I had to switch computers. All right. So, David, you see where the market is right now? 5902.75, right? Okay. Now watch as the market pops up here. See where this number is? 5903.75. Okay, the market hit it and made a new up close bar. Did you see that, David? And if the market hits now 5905, where this line is, it will make a new up close bar. If the market comes all the way down to this one, you see that? It hit that line, made a new bar. If it comes down right here to 5901.25 and then goes down one more tick, it'll make a down close bar. It just lets you know, what does the market have to do to make a new up close diagnostic bar, or what does it have to do to make a down close diagnostic bar? Okay? And this bar range indicator is on your Power Play template, and it's on the charts in the room as well. Okay? So, how will this help you? Well, it'll help you a couple ways. For one, let's say that you're looking at a potential entry right here. Let's say that you were going to look at this divergence entry. You see that it's, or let's look at a different example real quick here. So somebody says, hey, how will that help me? Well, for one, it just lets you know when, what it'll take to make a new up close bar or what it'll take to make a new down close bar. How is that helpful? Well, it's very helpful. If you're watching this market right here and the market pulls back and you see this bar forming, and you see a P, and you see a cluster, and you're saying, hey, this could potentially be a what, Bernard? This could potentially be a power P, right? Okay, and I know that if this bar closes down, it's a valid power P trade. And where do I enter? Well, I enter 1 to 3 ticks below the close of that bar, right? What do we all know can happen as soon as a bar closes? Boom, it can take off, right? It can take off, and you may not have time to get your order in, right? Does that make sense, Bernard? But if you know ahead of time, hey, this looks like a potential power P setup, that bar range, because if we were watching this live, that bar range would show you, hey, for this to close down and therefore be a valid entry, the market has to come to this level to make a down close bar. What could you do in the middle of this bar? Could you go in and place a pending order right where you want it ahead of time? Yeah, you set your entry. Does that make sense, Bernard? How that's helpful just in that aspect right there? Okay, so that's one way that that is very helpful. But let's talk about actually, let me pull that back up. Let's talk about something else here. So after we entered here, right, what happened on this third bar? Did the market go up high enough to make an up close bar? No, it just made a sling and came back down, right? Then we have another bar, and then on this bar, did the market go up high enough to make an up close bar? No. Okay. Let me show you something else here. What about this trade right here? Right, we got our power elevator, right? We entered the trade, market comes up, market pulled back. If we're watching this bar live, what do we have? We've got a bar range line up here, and we've got a bar range line down here, right? Did the market pull down enough to hit that level to make a down close bar? Nope. Market kept on going. Here we had a bigger pullback. But did it pull back long enough to hit the line and make a down close bar? Nope. Did it do that here? Did it do that here? Nope. Did it do it here? Yes. So when you look at this trade right here, would you have wanted to get into this trade and ride it up for just a little bit and then, oh, I got stopped out on that pullback. But man, it just kept going. You'd hope you'd want to ride that trend up as much as you could, correct? Okay. So I think you see where I'm going with this here. So that's the bar range indicator. So for example, if you trailed your stops with the bar range indicator, which you already have on your templates, okay, would you ever get kicked out by a sling? Like if you were in this trade here, you entered here and took it up, and if you were trailing your stop each bar with the bar range indicator, would you have got kicked out by this sling or this sling? Would you ever get kicked out by a sling? Right. If you trailed one tick behind the bar range indicator, for example. Okay. Let's look at some other examples. Let's say that you were in this trade down right here. Okay, let's just say you had taken this down trend, and you're going and you're going and you're going. Here's a pullback. Well, did it pull back enough to make an up close bar? No. So if you trailed your stop one tick on the other side of the bar range, would you have gotten kicked out there? No. If You were still trailing your stops one tick behind the bar range. Did this bar go up enough to make an up close bar? No. So it wouldn't have kicked you out. You wouldn't have got out here. You wouldn't have got out here. You wouldn't have got kicked out here. Here, you'd have got kicked out right there, correct? That makes sense? So you would have got this whole move and not gotten kicked out by a sling. And how many times have we seen in these big runs with power plays that you get a big long run, but you get a sling, 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 right? Sling, sling, sling. We see them all the time, right? What about this breakout of chop? You come down, sling, sling, sling. See it again there? Power play 4 set up, go all the way down. There's a sling, there's a sling, there's a sling, there's a sling. If we trailed our stop one tick behind the bar range, we would not have got kicked out on any of those slings. Would we have gotten kicked out right here, though? When this bar moves far enough to go up to the bar range plus a tick, boom, we're out. Does that make sense? Phyllis, I'm sorry, I'm not understanding your question here. Maybe you didn't understand the bar range. The bar range shows you what the market has to do. Okay, here's the bar range. This is the bar range indicator. These two lines, these two numbers. Okay, this tells you what how far down does the market have to go to make a down close bar. Okay, so if the market pulls back just enough to make a sling and then come back up and close up, it didn't come down and then break it by a tick to make a down close bar, did it? Well, your stop would be one tick below the bar range in that case. Does that make sense? Because if your stop is one tick below the bar range, that means the bar would have to close down, right? Yeah. And if your stop was right there, Phyllis, what would it take to hit that stop? It would take a down close bar. Does that make sense, Phyllis? Because if the market got down there, one tick below, it would make a down close bar, right? So again, in these examples, it pulled back, it pulled back, it pulled back, but did it ever pull back enough to make an up close bar? No, not till right here. So if you use that to trail down every bar, you wouldn't have gotten kicked out on that whole run there. Does that make sense? Does everybody see what I'm getting at here? Trying to explain to you about some different ways we can use this bar range. Is anybody confused by this? Chip, would you wait to move your stop only after a sling formed and the next bar formed? I'll show you. We'll walk through it, Chip. Okay. Okay. Yeah, Ivan, and we're actually going to cover that in some future webinars as well. Okay. All right. So everybody understand where I'm going with that. So if I entered this trade, I waited until I was up 10 ticks, and as soon as I'm up 10 ticks of profit, I move my trail one tick behind the current bar range. I would just be following this trade all the way down. Correct? And I wouldn't get kicked out until right there. That makes sense. Okay. Now, so you understand how let's just make sure here. Okay. So as I'm watching the market, my trail is one tick behind that bar range, right? Next bar form, I move it up to that bar range because each bar, and then I'm moving it up, right? So I had it here, and then I'm having it here, then I have it here. Each bar, I'm just moving it up, right? Easy enough. I mean, it's right there on your chart already, isn't it? Not only do you see the line, but it also tells you the number, And when it says 5930.00, I'm going to put it at 5929.75. Right? Oops, can't get to it. Anyway, you get my point. That makes sense. Easy enough, right? Okay. Yeah, if I stretch it too much, here we go. Now we're able to stretch a little more. So does that make sense? So every time the market moves up, so right now my stops are right here, right? Come on. That's my stop. One tick below it. Oh, we made a new up close bar. Now I have a new bar range. So I'm moving my stop up, right? Oh, and a new one. I'm moving it up. I'm just following it up. Make sense? Okay. Now, okay, now that's just the basics here. I'm not telling you that is the 100% rule. I'm trying to piece all this together and help you understand here. Okay. So let's say that you're in a trade. Okay. And you're using, let's say, Chart Trader, and you have an ATM strategy set up where you've got stops in place. Okay. Or you just go in and you buy right there. Okay. You buy right there. I mean, well, you'd have to have a strategy set up where you've got your stops and you just literally go in and you move them. Okay. Like if you're unsure about how to do that, let me just get out of here. Who was asking that? I'm sorry, I've got a lot of questions here. Yeah, Eugene, there's a video in the Ultimate Power Play training course that Lori did about ATM strategies, where she goes through and talks about how to set those up in NinjaTrader, and it's just a line that it's literally like I had there. It's just a line that you move up. It's just a line that you move up, and you can just move it up with it. And when the market comes and hits that line, Ninja will exit you right out of the trade. Okay? And you just move it right on up. There's a whole video on some examples how to set that up, and I believe I put a link in there to some other ATM strategy stuff that we'll talk about a little later in some of our advanced training as well. Okay? So let me just pause this, guys. I know we're kind of going on here. I'm trying to just help you piece this all together. So if we entered our trade, we waited till we were up 10 ticks, and then when we're up 10 ticks, we put our stop on the other side of the bar range, and then we just follow that down every one. That will not kick us out of any slings, right? Everybody understand that? Okay. Chip, you actually, we'll talk about that, okay? There is a way to kind of do that. But what will kick us out every time? If we trailed one tick behind the bar range, what will kick us out every time? What do we call this right here? This pullback and close down is a sling. This pullback and close down is a sling. So is this. What do we call it when it's an up close bar and then a down close bar and it keeps going? We call it an elevator, right? Those are elevators. So if I'm trailing one tick behind the bar range, that means as soon as this bar closes up as an up close bar, I'm out, right? It would get me out if I'm trailing one tick behind it, correct? So I would not get the rest of this move, okay? But I also don't know if it's going to be an elevator, and I don't know when this bar closes up if it's going to go the other way. So if I want to be able to stay in the longer trends and handle elevators as well, trailing one tick behind the bar range is not going to work for me, is it? Right? Because I'm going to get kicked out. I have to go a little bit more. Okay, let's take a look at a few here. I mean, just look at this example here, for example. Like, we've got the market coming up here. We've got a down close bar and an up close bar. All right, now this elevator didn't go a whole lot past the low of this bar. All right, but sometimes they do, right? Let's take another look. Let's find a couple examples. I really want you guys to see this. Okay, or there's that one there, right, that we're just looking at. The market came way down here. Got an up close bar, went up a few more ticks, and then came down and kept going. Okay. Let's see. What do we got here? All right, on this trade here, market came up. This bar closed down. Really, the market only went down another tick probably there and then came up. All right, but right to the tick, that one would have probably knocked us out, trailing with one tick. Okay. Let me see if we've got any more examples right here. So you see that with these elevators, sometimes it's just, one or two ticks that it goes down. But you'll also see oftentimes that it's, might be 3 ticks. Okay. So it all depends on how you want to trade and how tight you want it to be. Okay. So here's a beginning kind of basic beginner trailing rules. Okay. So we know that our initial entry is what? The stop is 1 tick above or below the bar, correct? Okay. Then we're going to leave our initial stop in place until we get to what? 10 ticks in profit. And why are we waiting till 10 ticks in profit? So that we can get past those first couple little pullbacks. Get past that 3rd bar sling area, right? Because we know if we move it up quicker than 10 ticks, we're probably going to get hit right away with one of those pullbacks. All right? So our initial stop stays in place until we're 10 ticks. Then once we're up 10 ticks in profit, we're going to move it either 1 to 4 ticks away from the bar range lines. And then continue to trail with the bar range. Okay? Trailing it 1 tick behind the bar range will keep you out of what? All of the slings, correct? But if you also want to be protected from most elevators, a few will still hit you, you want to probably go bar range plus 4 to be safe. Does that make sense? Let's just stop right here. Does anybody have any questions on this so far of what I'm saying? Does everybody understand? We know our initial entry is 1 to 3 ticks above the bar, and our stop is 1 tick below it. We're not going to touch that until we're up 10 ticks in profit, okay, which will be on this bar. And once we're up 10 ticks in profit, the live bar range on this bar would have been down here, about where this line is here. And we're going to have our stop 1 to 4 ticks below that, depending on how far we want. Do we want to only be protected from slings, or do we want to try to be protected from elevators as well? That's up to you. Okay? That's up to you. All right, so let's see here. Chip, so on the 10 ticks profit, if the stop is moved up, then you're not necessarily at break even, right? Yeah, exactly. It doesn't mean you're going to be at break even. Okay? You're still going to be below break even. Okay? So I'm not telling you once you're up 10 ticks to go to break even. Because on this bar right here, that would have been, you'd have been at 10 ticks within this bar. For this bar to close down as a down close bar, it had to come down right below these dotted lines to be a down close bar, which would be about right here on this bar. But you didn't enter till up here. Pretty much, not to the tick, but if you use this rule and trail a tick behind the bar range, it's pretty much like saying once you're up 10 ticks, move your stop up to negative 10 ticks instead of, closer to 20. Your initial stop is close to you know what, 10, 15, 16, 17, close to 20, right? So in a sense, it's like once you're up 10, you're moving into like negative 10. Once you're up 10, instead of your stop being under the bottom of the bar, it's about halfway through the bar, right here. It's about to the, body of the bar. But 10 ticks, move it up right behind the bar range. Okay. No, ongoing, you won't quite have that much, Dinesh. You're going to have, say, well, if you go 4 ticks, yeah, you'd have like 20, let's say. Have to really watch it, but get it in general. Waiting for the bar that hits 10 ticks profit to close. No, you're not waiting for the bar to close. You're just waiting for your profit to get to 10 plus 10. It's really not that hard. I mean, if you need to rewatch it, rewatch it. It's really not that hard. You have an entry here, right? This bar closes up. You enter 1 to 3 ticks above it, and your stop is down here. Soon as you're up 10 ticks in profit, you're just moving that stop up right behind the current bar range and just keep doing the same thing. Whether you want to put it a tick, 1 tick, or 4 ticks behind the bar range is up to you. Okay, does that make sense? Could you do 2 and after 1 go to 10, let the other one go? Yeah, David, yeah. If you're doing multiple contracts, yeah, you can do that a little bit different. Like let's say you're doing 2 contracts. Let's say you have a scalp and a trend. So you enter 2 contracts right here, and let's say once you're up 10 ticks you move the scalp up to 10 ticks to protect it, and you move your other one, and trail with the bar range. You could do that too. Okay. All right. Have I lost anyone here? Yes, Bernard, I'm talking about manual trailing here. Later, we'll talk about how to set up some, in some advanced trainings, we'll talk about some, automatic strategies. But yes, I'm just talking about just manually moving it up. Okay. Okay. We're not talking about the scanner today, Abdul. We'll talk about that some next week. Okay. This is not scanner training. This is for trailing stops for the ultimate power play. Okay. Did I lose anybody here, or is anybody confused? Does this make sense? Okay, now you've got it. Okay, making sense now? Okay, couple of things here. So initial stop, 1 tick above or below. We're leaving that initial stop until we get up 10 ticks in profit. Then we're going to move it 1 to 4 ticks behind the bar range line. That's up to you. 1 tick will keep you out of slings. 4 ticks will keep you out of a good amount of elevators. And then from there, we're just going to continue trailing with the bar range lines. All right? But, okay, once I'm up 20 ticks in profit, I'm going to probably go ahead and move it up to protect 10 ticks. And then, after the market keeps going, go back to continue trailing with the bar range. If it keeps going, once I'm up to like 30 ticks in profit, I don't want to just wait for it to come back and take away 20 of those, right? Or 15 or 16 of those. I'm going to probably go ahead and move my profit up to protect 20, which would probably be above the bar range. But then if the market kept going, then I'd continue to trail with the bar range. If I got up to 40 ticks of profit, I'd probably protect 30, which again would be above bar range. Does that make sense, what I'm saying there? Like I'm going to follow with that bar range, but if I get up to 20 ticks of profit, I'm going to probably lock in 10, which would be a little above the bar range, right? If I'm at 30 ticks profit, I'm going to probably lock in 20, and then if it keeps going, go back to trailing with the bar range plus 1 to 4. So I'm going to use that bar range to trail, but as I get to certain levels, I'm going to lock in. Right? Because I want to protect it. I don't want to think, man, look, I'm up 40 ticks in profit, but I let it go way against me. Yeah. Hey, I'm going to be pretty happy getting out of that trade at 30 ticks. I'm going to be fine with 30 ticks, right? Wouldn't you be? Hey, 20, 30 tick trades, I'm pretty happy with that. Does this make sense right here? I need to know if this last two, oh boy, hold on. I need to know if these last two things make sense here. Okay, initial stop, wait 10 ticks, follow the bar range 1 to 4 ticks behind it. Okay, I get up to 20 ticks profit, I move my stop to 10 to lock in 10 ticks, then go back to trailing. I get up to 30, I'm going to move it up to protect 20, then I go back to trailing with bar range. I get up 40, I'm going to protect 30, go back to trailing. Makes sense. Anybody confused or have questions, tell me now. Like, this is very, very important, so I want to make sure you got it. So let me know, type it in if there's any confusions or questions about this particular part here. Ed says, replay last night helped me to understand. Great. That's awesome, Ed. And when you're replaying, you'll be able to see this stuff. Like, you're watching the markets live, like, okay, let's say I entered a trade here, I'm up 10, so where's my stop? It's 1 or 4 ticks behind this. I'm just going to keep taking it down, right? I'm going to just keep heading it down. The market keeps going down. I'm just going to keep, when this next bar closes down, which has to hit this level and go 1 tick, then there's going to be a new bar and a new bar range, right? And so right now, my stop's right here, if I'm using 1 tick or 4 ticks, whatever. And I'm just waiting to see, is the market going to go down and make a new down close bar? Or is it going to come up and make an up close bar and get me or not? Okay, it's getting close. My stop's right here. Oh, made a new bar. So now I'm moving the stop down. I'm just following it down. But down here, I probably got in somewhere right here. So I'm at what? 5, 10, 15, 20. So I want to move my stop probably right here. I want to lock in 10. So my stop right now would be inside this bar range because I want to lock in 10. Right? That makes sense? But if the market keeps going down and makes a new down close bar and then a new bar range below my current stop, protecting 10, then I'll move it on down and keep following it. Right? Does everybody get what I just said? Oh, now look. Okay, cool. Made a new down close bar. So I'm going to adjust and I'm going to keep going. I'm going to keep going with it. Then when I get up to 30 ticks in profit, I want to lock in 20 wherever that is and then wait for it to keep going. If it goes, I want to go with it. Make sense? Okay. Does that help at all for you newbies? This is not the end-all, is-all of trailing stops. There's a lot of advanced stuff we're going to talk about with order prints and VAD and levels. But just as an initial place to start, where you're not giving up too much of your profits, you're able to, let the market run and, handle some of these little pullbacks that are just going to be slings. Does that help at all as a very simple way to start? For some of you that were new and like, I just don't know what to do right now when I get in. Does that at least give you something? Or was that not helpful at all? Like, tell me. Let me know. Very helpful? Okay. Well, good. And again, it's just a basic. And notice, you don't have to put anything new on your chart. You already have this on your chart. You already have the bar range. Jesse says, yeah, this would have doubled several of my trades today for sure. Awesome, Jesse. Okay. And obviously this video is recorded. You can go back and watch it again. But even just what we covered here, do you think you could get off this webinar and do this? I mean, is that simple enough? Use your initial training stops. Don't do anything till you get to 10 ticks. And what does that do? That takes care of problem number 1 that most of you are having, getting caught in those initial pullbacks and third bar slings, right? Just that right there of not Well, some of you guys were doing that. Hey, I was already doing that. I wasn't pulling up my stop until I was at 10 ticks in profit, but I was pulling up my stop to break even after 10 ticks, and it kept getting me every time, right? So some of you were waiting for 10 ticks, but you were pulling up your stop too much, okay? Just like we see on this example here. Our entry was somewhere right here. We get up to 10 ticks in profit, we move our stop up to right here, it's going to hit us. So let's leave it a little bit behind there and follow that bar range up, okay? So, and yeah, trailing, yeah, Frank said it right. Trailing is the risk tolerance that each person has. And that's why I was saying, you know, that's really up to you. Do you want to trail one tick behind it to say, hey, I want to catch the big runs if it's only, you know, slings? But you've also seen some of the big runs that go and they have an elevator. And they, you know, if you want to be able to handle those elevators, you probably need to go, say, 4 ticks behind it to be safe. You know, and do you want to have a little bit bigger stop to get those bigger runs? Or maybe you want to start with one and then go to another, or whatever it may be. Okay? But you want to give the trade enough room to breathe and go and take, so you can take advantage of it. But you also don't want to sit there and wait for the market to, you know, man, I'm doing great on this trade. I'm up, 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 up. But man, I'm going to wait for 1 bar and 2 bar and 3 bar and 4 bar and 5 bar. Yeah, it's probably going the other way now. Let me get out. How much did you just give up? 5, 10, 15, 20, 25, 30, 30. You gave up like 35 ticks, right? So you want to give it room to breathe so you can go with it. But you don't, but so you want to let your profits run, but you also want to protect your profits. Does that make sense? John, I don't think I could have said that any better than you just said it. John Capper says, as an aside, sticking to the legit power plays and not getting creative makes it a lot easier to be patient with the trade and move the stop gradually. There's our webinar. John, you take it from here. I mean, John's absolutely right. Because when you're pushing trades and taking trades that really aren't the right setups, they might not go as far for you. But when you're taking these right trades, where you're expecting a good size move, and you're feeling good about it because everything lined up and all the rules were followed and you're expecting that good move, you're not freaking out as bad about those little pullbacks, are you? Because you expect them to happen all the way down. Okay? Yeah, makes sense? Okay. So I hope that was helpful. I hope that gets you started on the road of at least somewhere to start. Next week, as you've seen on the calendar, you know, we're going to start a 3-part series on advanced order prints, okay, and some advanced training that's going to help you guys out a lot more. And we'll do some even more training on all this. We'll talk about levels. We'll talk about VAD. Some of you have heard about IR, institutional range. We'll talk about how to use those. We'll talk about ICE and ICE histograms and about hiding behind high volume nodes, trailing your stops that way. We'll talk about order prints and different ways you could trail your stops with order prints, okay, behind, you know, clusters and behind trapped orders and block orders and all kind of stuff like that. All right, this is very, very basic kind of a, hey, you know, if you're in our open house and you're brand new to Apex, brand new to trading, and you just need a, hey, I just need something to get me going, this is your starting point that I taught you today. But we're going to jump in and help you really learn to read the markets and really dig into that, okay? And know how to look at levels and OP to tighten your stops, all right? Quick question here. That's what we're going to be covering in advanced training. But just because you haven't been through advanced training doesn't mean to not use your head, guys, okay? to not use your head. So just stop for a second. If we were, this chart we were talking about here, if we were taking this trend up and we were following 4 ticks behind the bar range, all right, well, this bar would have closed down, right? So where would our stop have been? 4 ticks below it, right? Our stop would have been right there, correct? Does everybody see that? Does everybody agree with that? Anybody not see that or not agree with that? We're taking this uptrend, boom, 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 boom. For the bar range, for this bar to close down, it had to hit the bar range and go another tick, and our stop was 4 ticks below it. So our stop was right there. So we gave up a little bit of profit, right? Because, hey, that's part of it. We want to take the, the pullbacks and the whatever, So we gave up a little profit, did we not? Okay, so I took that big run. I'm happy with that big run. I got a lot of profit out of it. I only went through the initial training that John did. I haven't gone through advanced training. So I just have to stick with this for now. Do you? You watched the order prints training or the order prints overview training. You watched a video of clusters in there. You watched the power play setups. When I'm getting up here, and this has already been a good sized trend, what are these yellow things right here? I'm at the top of a trend and boom, what is that? Cluster. The next bar, boom, what is that? Cluster. I see this bar starting to take a long time and hesitate. How do I know this bar is taking a long time and hesitating? What is this right here that you use on every single trade and template for power plays? Bar timer. So what is that telling you? Chop. And then what do you get again on this bar right here in the middle of the bar forming? What do you think is probably happening to that trend? Is that trend done? Do you need to go through an advanced training part 1, 2, and 3 to see that based on what you already know from the existing courses? So if I'm seeing that, I see a momentum push right at the end here. I see a cluster. I see another cluster. Maybe there's a mini magnet starting to form up here where there's some, numbers up there. This bar is just really hesitating, taking a long time. Another cluster. Am I leaving my stop way down here to give back all that profit? Well, I just got to follow that rule that John said because I hadn't been through advanced training. You know enough that when you see all that, your stop is being pulled up pretty darn tight, especially when you see that third cluster. Mine's already tight when I see the second cluster. But when I see this third cluster form, I'm pushing it right up on that sucker. Like, I'm right up on that. Does that make sense? I mean, you see that? Yeah. I mean, even on that second cluster, that second cluster, I probably had that just a few ticks below it. So I'm going to save myself 7 or 8, 10 ticks there of giving back because there's no reason to give that back, is there? Like, I didn't plan that. That just happened right there in my little replay. What about the other way? It's happening again right now. Let's say that for whatever reason, I took a trade south. And what do I see here? I see a cluster. Okay, cool. Does that mean we're hesitating or going to keep going? All right, well, we keep going. Great. Oh, now there's another cluster. And this bar started to hesitate, taking a while, and another cluster. Am I waiting until 4 ticks up here to get out and just give my money back? Like, no, my stop is pulled way down. I'm protecting big time, right? Does everybody see that? Like, am I the only one seeing that? Do you have to, I don't know if I follow John and maybe some guru can see that or somebody been trading for a long time. Can you just not see that yourself? Yeah, yeah. And like Robert said, you know, and then you look down here and you got some weak VAD and that's pretty clear. That's common sense, okay? So I taught you a very basic kind of ABC 1, 2, 3. And then, yeah, we're going to do more in-depth training later. But you already know this. You can see that. So don't get stuck on my ABC 1, 2, 3, follow behind the bar range when you see stuff that's plain as day like that. Because you're just giving money back. Okay? What about this? Same here. Say I'm in this downtrend. Boom, 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 right? Okay, I'm taking this trend down. I'm taking this trend down. I'm getting close to settlement. Strong level. I'm getting right here to these levels. I've got a 50 EMA. I've got these, you know, highs and lows. I'm getting these several levels here. And what do I see at the bottom of this trend? I see a bolt with a cluster. Boom. Then I see this bar here start to hesitate. Well, right now, where's my stop technically? Well, it's up here at bar range plus 4. My stop's up here, right? Technically. But when I'm seeing this cluster, and then I'm seeing this bar form, I see numbers down here at the bottom that haven't gone back to get hit, which means if this bar closes up, that'll be a mini magnet. While I'm watching this bar, I can also see this number right here live, whether it's green, red, or divergent. And then do I have to wait for a bar to close for a cluster to pop up? Or does it pop up in the middle of the bar? Like once a cluster's there, it doesn't go away, does it? It could move in the bar, but it's not going away. So if I'm seeing that, I took this trend down, I'm getting to the levels, I've got a push down with the cluster, now a hesitation, I see some orders down here, maybe I'm seeing that divergent, and that cluster hits right there. Do you think my stop is still way up here at 1 to 4 ticks above bar close? Or is it shoved down like, yeah, I'm probably out. Does that make sense? Do you see that? I mean, that's just common sense, right? Like you see that. Don't give back more than you have to when you see something plain as day in front of you. Okay. You know, what about here too? Like, you know, I've had this good move down, I had a little hesitation, I've got this move down. This right here going through this level, this sling bar, what did this sling bar do? This sling bar was a what? Divergent bar, right? Comes down here, maybe I've got my stop, you know, 4 ticks above to keep me out of this elevator. It comes back down, I see this huge bar, and then we just stop. And this bar starts to hesitate, and I'm right there at that level, and then I see there's orders down here. I'm pulling it down pretty tight. You know what I mean? I took a trade out of chop or swing. I'm pulling down, I'm pulling down. What is this? 0.7 deviation. I'm getting to a level. And what did I see right here? Divergent bar. What did I see right here? Cluster and divergent bar. I'm probably pulling that tight, right? Especially when I start to see some hesitation here again. I'm pulled real down tight. I'm not leaving it way up here. I mean, those are just pretty clear examples, right? What about here? I'm taking this trade up, up, up. I'm trailing behind the bar the bar range. But I've got a cluster and a divergent bar. I've got another cluster with a big push, double bolts, big push. Then I start to hesitate here. My stop is not way down here, is it? That's ridiculous. Does that make sense? Does anybody not see that? My stop is like right here under that cluster. I'm not going to let it go all the way down and close down and then 1 to 4 ticks. Come on. You've got to run, you've got a cluster, and you've got divergence. You've got a big push in a cluster, and it can't go anywhere. It's hesitating. Out. I'm out. Does that make sense? Ivan says, I'm curious if there's a correlation in the location of the cluster in the bar as to a clue of a reversal about to occur. Ivan, we've actually done a lot of testing on that, and no, I cannot tell you there's any correlation about the location of the cluster in the bar for saying it's a reversal or not. Okay, can't say that we found that, and we've tested that quite a bit. You know, on certain of the like power sling or, you know, power sling through swings, you know, we like to see the cluster on the other side, you know, just to show some push in that direction. But in general, when it comes to like a trend, you know, where it's at, we have not seen anything like that. So, okay, guys, like take this basic stuff and use it, but watch out for this stuff that's just clear as day. You know what I mean? Like, just clear as day. And we're going to dig into a lot of stuff like this, you know, about at the end when you see like a big push, like much higher numbers or real fast bar or real big bar, and then it slows down. Tighten up a little bit. Be smart about it. If there's a level there, hide behind the level, and we'll get into all this, okay? But utilize this basic stuff. Look out for, you know, common sense stuff. Think outside the box. You know, also think about this. When you're watching a trade, okay, and you're seeing stuff happen like, you know, oh, like, you know, this one here we talked about, oh, we're coming down and we've got a cluster, and one of you pointed out something about VAD, and look, we've got some chop, and, you know, we're not far from a level. If you're in a trade and towards the end of that trade, you start seeing a level coming up, and you see something going on with VAD, or maybe there's some divergence, and then a cluster pops up, and then you start to see chop, do you think that might be a good indication to maybe get out of that trade or to tighten up that stop? You're in a trade, you're going up, you're profitable, you got a level, you've got something going on with VAD, you get a cluster and you get chop. Does that make you think maybe I should tighten my stop up? Would anybody think that perhaps? Okay. Now just stop for a minute and take a step back. Look from outside the box and take a breath. Look at that list. Look at this list of 4 things. Does that list remind you of anything? Level, VAD, cluster, chop. That makes sense, right? I'm in a big trend, but I'm getting up to the top of the trend, and I see a cluster, and I'm starting to see some chop, and we're at a level. Doesn't that sound like an entry? Aren't those the 4 exact things you look for in a power play entry? What is a power play entry most of the time? Well, a power play 4 is a lot of times after the market's made a move and then starts to chop at a level with a cluster. And when does that normally happen? Not all of them, but a lot of time after a what? A move. What is a power play 1? Where the market made a move big enough to go higher than the last high. And what happened at the end of that move up? It went higher than the last high, so that was a move, got towards a level, ran out of steam with VAD, and had a cluster. So imagine that you're in that move up. And you're taking that move up. And what do you see up at the top? I'm getting to a level. I'm starting to chop. I got VAD divergence. And there's a cluster. That's telling you there's about to be a number one setup possibly. So shouldn't that possibly tell you that you should be getting out of the one you're in or tightening up on the one you're in? Sometimes we get so wrapped up in the trade that we're in and so wrapped up in I followed the rules, I got in this trade, now I just have to completely focus on trailing this trade. And then when I get out of that trade, hopefully I did okay, and then we'll start looking for another trade. Think about what you know. I don't think you guys realize how much you know and how much you were taught in the power play setups. And I've talked to you about this before. Power play system is not all red-green indicators, is it? It's not buy-sell arrows, is it? You really have learned to read the market. You've learned levels. You've learned volume. You've learned VAD. You've learned clusters. You've learned chop. You know those things, guys. Turn it upside down. Turn it upside down when you're looking at your stops. And what you'll find is oftentimes they're the same things you're seeing, and you'll often find that the areas that you get out of a trade in are when you get in another one. And when you can spot that and say, hey, that's a, maybe this is a bad example, but let me just look at something here. Okay. What is this trade setup right here? Can anybody tell me what this trade setup going up is? It's a Power X, right? We learned that the other day. It's a Power X trade, right? Okay. What was this trade? Going down. It was a Power X. Same thing. So if I'm in this Power X trade going down, but I see a new Power X forming to go up, my downtrend trade, my short trade, is my stop way up here 4 ticks above the close of the bar range? Does that make any sense? No, because I already see that it's setting up to go the other way with a valid trade, perhaps. So I'm tightening that stop. Does that make sense? You follow what I'm saying? Start to think about trailing a little bit the same way as you think about entering, and just turn it upside down, because you'll see a lot of times it's the same. Make sense? Is that a little bit of a light bulb for some people too? Like, oh yeah, that makes sense. I know what to look for here. And then you're pulling up your stop. You're getting out of your initial trade early, and you're ready to go the other way with the new power play setup, or a continuation of the new power play setup, whatever it may be. So start to think like that a little bit, and yeah, Matt, exactly. Anticipate it a little bit. Okay? Yeah, Chip, I'm going to be tightening because that X will appear while the bar is forming, but it could go away. Like it's not set there until the bar closes. But when I see there's a level, an X, and a cluster that could be a potential setup the other way, I'm going to tighten my stop a little bit. I'm not going to leave it way up there. You know what I mean? Yeah. So start thinking about things that way, guys, and looking at your entry rules the same way, because it's the same thing. It's the same 4 factors. So, okay, guys. So again, this was step 1. This is some basics to get you going, some ABC 1, 2, 3s to follow. We're going to be doing some advanced training over the next couple weeks. You've got a lot of great webinars this week. Use the weekend to go over them. Remember, Monday, we've got a new indicator webinar, okay, that we're going to be releasing out to you. So I hope this helps. I don't know if this is what you hoped for. I don't know if this webinar is what you expected. But again, it's just part one of a mini series we're going to do here. This gets you on the right path. This gives you something to implement today, tomorrow, right away, like immediately. 10, don't move it until 10. 1 to 4 behind the bar range. Keep your eyes open for those other things. That's something you can use immediately from day one, and then we're going to start to build on that and get a lot deeper in. Okay. Keith, you said, is there a way to get the copy of the template you showed today that was not the CSOP? Not quite sure what you're asking there. You're talking about this template right here? This one I showed, Keith? Was it one of the ones on the power play? I mean, on the PowerPoint here? I'm not sure which template you were referring to. Can you tell me which screenshot you're asking about here, buddy? Any screenshot I showed you on here was either C's OP or C's diagnostic bar. The one with the markings. Man, I'm sorry. I'm not sure which one you're talking about with the markings. In the forum post. Tell you what, the one with the words, bar range. Tell you what, Keith, can you shoot me a ticket in the help desk? Or can you find, oh, okay. I think I know what you're talking about. Yeah, shoot me a ticket in the help desk. You're talking about the different color ones. I think it's Gary. Okay. I think I know what you're talking about. You're talking about this one here. Yeah, okay. Yeah, shoot me a ticket in the help desk, okay? And it's basically just, you know, different traders use a few different variations, or they just use a different background color because they like it visually, okay? But yeah, shoot me a ticket in the help desk and we can try to get that for you, or I'll do a webinar and show you guys how to change some things around there, okay? But yeah, we can do that for you. Okay, so real quick here, one thing I want to make you guys aware of, I know most of you guys are in open house here, and you're going to be seeing some stuff later today. This is not a sales webinar that we're on today, so I don't want you to feel like I'm selling you anything here. I just want to make you aware, something you're going to see here in the next hour or so. You'll see it posted in the room. You'll see it on Facebook. You'll see it on the emails. Is something we do here at Apex. As you know, we have our monthly membership. The current elite membership is $200 monthly. That includes everything. As you already know, as of September 18th, those prices will be going up to $300 a month. And that was part of the reason we gave you the open house free time, so that you had time to try it out and then get grandfathered in for life at the current rate of $200 before the price went up. You still got time to do that. But something we do at Apex sometimes is, you know, we have our monthly memberships, but we at times will offer an annual membership, okay? And we'll do those promotions sometimes around holidays or special events or whatever. And so we're doing one over Labor Day. I just want you to know what it is, so as a newbie in open house, you don't get these emails and wonder, hey, what is this? Well, you know, on the $200 plan, if you pay that out over 12 months, it's $2,400 for the year, right? Once the price goes up to $300, you know, if you paid that every month, it'd be $3,600. So what we do sometimes is a promo, and we're going to do that over the Labor Day weekend. It's starting today until Tuesday night at midnight. It's a Labor Day promo. We're offering an annual elite membership for $1,800. Okay, and it's a lifetime renewal rate. You know, you can lock that rate in for life. So this is not a sales webinar. I'm not trying to sell you on this. I just did not want you to feel like it wasn't covered with you as an open house member, or, you know, that offer wasn't available to you. I didn't want you feeling left out, like you couldn't take advantage of it. You can if you want. You know, you still have your free time in open house. You still have the option to sign up for the monthly at the end here. But, you know, if any of you wanted to take advantage of the discount for the annual, you can do that. It is available to you guys as an open house member as well. So I just wanted you to know what that was when you saw those emails coming out. How do you sign up for that if you're interested? Once you log into the Apex website, you just go right here to sign up for Elite Membership. Click that button. I've already added it on to the order form. Okay. So if anybody's interested in that, go for it. Like I said, this is not a sales webinar. I'm not trying to sell you on it. I just didn't want you to feel like you couldn't take advantage of it. If there are any of you that already know, hey, I'm planning on signing up at the end of open house, you know, but man, I'd really like to take advantage of that savings on the annual. You can do that, and I don't want to. I'm not trying to get you to give up any of your free time, because we've still got like, what, 12 days left free in open house. So if any of you want to take advantage of that annual and that savings, and you want to sign up, go for it. Go ahead and sign up between now and Tuesday. And if you sign up, as soon as you do, just shoot a ticket to the help desk and say, hey, I was on that webinar with John. I signed up for the annual. Go ahead and extend to me. And what that will do is, you know, when you sign up for the annual, it'll sign you up right away. It'll bill you right away, and you'll have 12 months access. And we'll just go in the back end and add 12 more days to it. That way you're renewing billing date. That way you're not giving up the free time of open house. I'm not trying to get you to give up anything or to sign up for anything. I just want you to know if you're not left out of the offer, and we'll add on your free time and all that. So just throwing that out there so you're not confused by what this little promo is a little later today. Doesn't change anything else with open house and all that if you want to wait for the monthly. So, okay, guys, that is it. I appreciate you taking the time out today. I know we went long again. I hope that helped you. I hope these webinars all week really helped you. I really feel like we gave you some great stuff this week, and we're going to do that again next week, get you a lot of great stuff, some advanced trainings, and really dig in. Utilize these stops, check it out, have a great holiday weekend with your friends and family. Replay and watch these. We will see you Monday afternoon for the release of the Apex oscillation detector indicator. You're going to love it. Okay. Yep. Thank you, guys. I appreciate it. Yep. Matt, everybody, thank you. Good interaction, good questions. Hope it was helpful, guys. Have a great one. Take some time. We'll see you Monday.